You earned $1. Before it reaches your pocket, the government already took a cut. Then you spend what's left. They take another cut. The store pays tax on its profit. That profit becomes a dividend, taxed again. You invest it, taxed again. You die, taxed one final time. $1, 6 taxes. Nobody in school taught you this. I'm Eric. I'm not a politician. I care about the mechanics. And at the end, 3 things people who understand this do differently. Let's go. Let me introduce you to $1. I want to follow it through the entire American tax system. A roadmap with 6 checkpoints. Each one is a different tax. By the end, you'll never look at money the same way. This video is not about whether taxes are good or bad. Roads need funding, schools need funding. I get it. This is about whether you understand how many times you're being taxed. Most people don't, and that costs you real money every day. Tax number 1, federal income tax. You earn money, the government takes a percentage. Everyone knows this one. But here's what most Americans get completely wrong. The bracket you're in does not mean all your money is taxed at that rate. If you earn $80,000, you pay 10% only on the first $11,600. Then 12% on the next chunk. Then 22% only on income above $47,150. Your real effective tax rate on $80,000 is closer to 16%. Some people refuse raises thinking a higher bracket taxes everything. That is not how it works. Then, most states add their own income tax on top. California, 13.3%. New York, 10.9%. Texas and Florida, 0. Same job, same salary. But California versus Texas means you keep $10,000 to $15,000 more per year. Location is a tax decision. And we haven't even mentioned FICA. Social Security and Medicare take another 7.65% from your paycheck before you ever see it. Your employer also pays a matching 7.65% on top, money they could theoretically pay you instead. Checkpoint 1 complete. Income tax, state tax, and FICA together. The dollar just lost roughly 30 to 40 cents before you even touched it. Tax number 2, sales tax. You took your after-tax dollar, already reduced, and you want to buy something. The state takes another cut. The average combined sales tax in the U.S. is 7.12%. Tennessee hits 9.55%. On top of money that was already taxed. Sales tax is invisible, baked into the transaction. You don't file a return for it. It just happens every single time. A study found that when prices include tax, like most other countries do, people spend 8% less. The U.S. shows prices before tax specifically because it feels cheaper. Tax number 3, corporate income tax. Your dollar went to a company when you bought something. That company made a profit, taxed at 21% federal. But corporate taxes don't come from magic corporate money. They come from revenue that came from you. Economists call this tax incidence. Who actually bears the burden? Companies write the check, but consumers pay through higher prices. Every time. Tax number 4, dividend tax. You invested your after-tax dollars in a company. That company made profit, already taxed at 21%. Now that already taxed profit reaches you as a dividend, and you pay tax on it again, 15% or 20% depending on your income. The combined tax rate on corporate profits reaching investors can hit 36 to 40%. The same profit taxed twice. Tax number 5, capital gains tax. You bought a stock at $10, it's now worth $15. You have a $5 gain, and the government taxes that gain. Hold the investment over 1 year. 15% to 20% tax. Sell before 1 year, up to 37%, taxed like regular income. And capital gains tax doesn't adjust for inflation. You might pay tax on a gain that doesn't even exist in real terms. Tax number 6, the final one, estate tax. When you die, if your estate exceeds $13.61 million in 2024, the government takes 40% of everything above that threshold. Some states start estate taxes at just $1 million. Massachusetts and Oregon, $1 million threshold. So even at smaller scales, this matters. In 2025, current law may cut the federal exemption roughly in half to about $7 million, unless Congress acts. This is real planning territory right now. Let's put the whole journey together. $1 earned. After income tax and FICA, you're down to about 65 cents. Sales tax takes another 7 cents when you spend it. Corporate tax adds another 1 to 2 cents of hidden cost. If you invest and earn dividends, another 15 to 20 cents per dollar. Capital gains when you sell, another 15 to 20 cents. And at death, 40% of everything above the threshold. $1, multiple bites, multiple separate mechanisms. Not every dollar goes through all 6. A dollar you spend immediately never hits dividend tax. A Roth IRA skips several entirely. People who understand this system don't just get angry, they make different decisions. 3 things, all legal, all available to you right now. Thing 1, tax-advantaged accounts. A Roth IRA lets you invest after-tax dollars, but all growth and withdrawals completely tax-free forever. The IRS allows $7,000 per year in an IRA and $23,000 in a 401k in 2024. If you're not using these first, you're voluntarily paying more tax than you have to. Thing 2, hold investments longer than 1 year. Short-term gains taxed up to 37%. Long-term, maximum 20%. Same asset, same profit. One timing decision. The difference on a $50,000 gain can be $8,500 to $17,000 in extra taxes from one decision about when to sell. Thing 3, tax loss harvesting. If you have investments that are down, sell them at a loss. Use that loss to offset gains elsewhere. Immediately buy a similar but not identical fund to stay invested. This is completely legal. Vanguard research found it adds 0.5% to 1.5% in after-tax returns annually. Over 30 years at 1%, that's an extra $90,000 on a $100,000 portfolio. From a strategy most people have never heard of. Bonus mindset shift. Your salary is not your take-home. A $90,000 salary in Texas is not the same as $90,000 in California. Run the after all taxes number, always. The tax system is designed to be complex enough that most people never look beyond the first layer. Every layer beyond income tax is effectively invisible unless you go looking. Understanding how taxes work doesn't make you anti-government. Surgeons understand the body in detail. That doesn't mean they hate the body. This is just financial anatomy. 3 actions starting today. Open a Roth IRA. Check your investments are in the right accounts, and before any major financial decision, ask the after all taxes number.
Subscribe for the next video. And in the comments right now too, which of the 6 taxes surprised you the most? I read every one.